Hi everyone and welcome to my morning report chart appraisals on Wednesday 13th of September with me, Rich Pro Market Analyst at Hantec Markets. We've got a bit of a dollar rolling over, I think. We've had a strong rally on the dollar in the last sort of couple of days, but is the dollar rally just running out of steam? Here we see the dollar index, where the 2 days of decent gains recovering, but just rolling over this morning. And that's come as Treasury yields have just started to drop away again. We've seen that 10-year back to the 216.50 area, which was an old key low, failing around that level. You're still in that downtrend. You still look at this chart and think, well, rallies are a chance. The recoveries on the Treasury yields are a chance to for them to roll over again. It certainly seems to be that case, and I think that's going to put pressure on the dollar. And it seems as though today we're seeing that with the euro finding support. We've got the dollar yen rolling back over. We've got gold again forming support across the commodity currencies as well. There are still gains against the dollar. One notable exception: sterling, after the average weekly earnings growth disappointed, sterling has fallen away. Now, average weekly earnings missed estimates, 2.1% versus 2.2% on the ex-bonus. Now, that coming after the inflation data yesterday for the UK was higher than expected, that means that the Bank of England's got a really difficult conversation to have this week as to, there was possibility that if inflation went up and also average earnings went up, then the Bank of England might start to think about turning a little bit more hawkish, certainly in its statement. But can it really do that with real wages deteriorating in negative territory already, and real wages deteriorating? So I don't know. I don't see how they can really justify a hawkish tilt. So we might see a bit of a sterling correction on the back of that. But that's the sort of factors that we are looking at today. We've also got the FTSE 100 underperforming again. The DAX is solid. The CAC relatively solid, but sterling, on the FTSE 100 again underperforming. So the DAX rally is certainly outperforming that of the FTSE. Now, in terms of what else have we got to look forward to today, we've got inflation for the US, we've got the PPI for the United States this afternoon. Now, this comes a day before the CPI, and PPI is expected to come higher, actually, 2.5% on the headline and 2.1% on the core. Now that would set markets sort of nicely up for CPI tomorrow, although CPI is actually expected to dip in the States. Be interesting to see how the market takes that PPI data this afternoon. We've also got weekly crude oil inventories from the EIA, expected to see another inventory build of 3.5 million barrels on the crude, distillates and gasoline stocks, meant to be seeing a drawdown. So that's this afternoon at 3:30. So my chart of the day is the euro yen. Now what we have seen euro yen is this market running higher lows and pushing pressure on the upside. At 31.70, I will open out that because this is a long-term key level. Seems to be a pivot on a longer term basis, 31.70, and it's looking to break out above that. It closed above it yesterday. It's trying to hold on to that move today. But you look at this and you think, well, that's an uptrend. You've got strong momentum configuration. You've got MACD lines turning high, stochastics crossing higher and accelerating higher. RSI 62, not stretch. There is upside potential for this to run higher. And certainly, I think if it can hold a break above 31.70, I think that really does open the upside again, because you're talking about levels. Talking about levels on this that we haven't seen for 18 months, really, and a break up above sort of 32 figure would sort of bring you back into the 134, 135 area. So there is perfectly possible that we could see further gains. So you'd be looking to buy into weakness on this. I think you've got a decent area of support now, having been sort of these old breakout levels throughout that little correction of the last couple of weeks. Have left support sort of 31 area, 31.35, all the way up to 31.70. So you've got a nice sort of basis of support that's been left now that you can work to. So I think it is looking pretty decent for any sort of little corrections as a chance to buy that. Corrections that unwind this hourly momentum, find support, and go again. I think that would be a decent buying opportunity. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.